Welcome back, guys. This week is going to be a much more exciting week than last week, thank God. And we're going to start off this week with a play on a company that you actually wouldn't think is that exciting, but looking at the historical data, actually looks like there's a really strong play here. And that company is AutoZone. Now, AutoZone typically does pretty well around earnings. And considering the fact we just had a market-wide capitulation, it looks like a pretty strong bullish entry here. Before we get started, make sure to like and subscribe so you can get my plays right as soon as they come out. If I'm making you money, then you better just like the video, right? All right, let's get into it. AutoZone is a company that retails and distributes replacement auto parts all over America. Now, you would think with retail in general on its way out, AutoZone would somehow be affected, but looking at the financials, that just isn't the case. AutoZone has seen consistent year-over-year revenue and earnings growth for the last 4 years, and they almost invariably beat their EPS estimates, which is important this quarter because they're projecting one of their highest EPSs in their history. Post-earnings, AutoZone tends to see bullish movements, but has seen pretty bearish movements at least twice in the last 9 earnings. The put-to-call ratio is cause for concern as it's sitting at a decidedly bearish 2.1. When we factor in that AutoZone has only appreciated 8% since their last earnings, we clearly have cause for a bullish position. So for me, the play is going to have to be a put credit spread with the short leg around 1150 and the long leg at 1145. As an alternate, you could go for a 1240 call, but I'm really not in love with that play. As a final note, make sure to hedge your portfolio this week. The stock market has kind of been going crazy and you don't want to get caught in a market-wide capitulation. Now, if you don't know what I mean by hedging, keep an eye out. I will be releasing a tutorial video on that later this week. And study that one religiously because it's probably going to be the second most important tutorial I ever release. I do expect, as many traders and many funds expect, that volatility is going to increase quite a bit prior to the election. And what that means is you can have a great play that gets crushed just because the market in general panics. And that's where hedging comes in. If you need a good broker, a good source of stock market news, or a good source of options flow, check out the referral links down below. Finally, make sure to subscribe so you can get my plays as soon as they come out, because they're all very time sensitive, and if you get them a day or two late, they're going to be completely useless. Thanks for watching, guys. Good luck this week. Let's make some money.